So what are you seeing in the economy right now that's driving the growth?
Well, first, let's start with the quarter. We had $6 billion of net income. And as you said, we had a $1.6 billion reserve release, which I think is a good sign for what we're seeing in the economy and the confidence we have around that. We also had some gains in our venture and private equity business. But underneath that, I think you really saw progress. First, progress in the overall economy. You're seeing, continued high levels of liquidity, credit performing really well, growth starting to happen, consumers really starting to spend money, and that really accelerated through the quarter. And then when you look at our results, I think you saw progress across a lot of our priorities, both the efficiency agenda that we've been talking about. You've seen us continue to support the recovery through a lot of what we're doing for small businesses and minority deposit institutions and investing there. And then you saw progress across, some of the things we're doing on the product side as we launched a new credit card into the market just a few weeks ago. So I think progress really all across.
What about net interest margin? Obviously, the spreads are always a big deal for you guys, and it came in better, and there was resiliency there, especially against some of the other banks. What's the forecast, given we just heard from Chair Jay Powell just in the last hour, does not seem in any hurry to raise rates or even to start to taper asset purchases, still thinks inflation is transitory. So what's the outlook?
Yeah, look, I think it starts with loan demand, right? And in many of the businesses, we just haven't quite seen that inflection point yet. In our commercial bank, loans are down, good activity, good conversation, but it hasn't translated into the loan side. In some of the other commercial businesses like our corporate investment bank, we've seen a little bit of growth in commercial real estate and other products. On the consumer side, you're starting to see some green shoots there, both in card spend and in the auto space. But we're still seeing, a lot of activity on the home lending side that's bringing balances down. So I think we still have some room or some time to let these trends play out a little bit. On the rate side, it's been a little all over the place, I think, over the last few weeks, and I think you're seeing a lot of the patience that the Fed's showing really sort of resonate in the market. I think as inflation's going to, it really looks like a lot of what's driving the prints on inflation to be a little bit higher than people expected are the things that are transitory. But that'll take some time for us to really see if it's going to persist and sustain and have a real impact.
As you said, Mike, in the quarter's numbers, there was clear progress. The share price reacting positively well ahead of the group today because of that. I feel like the share price also started to react on the earnings call when you suggested that the buyback amount could be increased. 18 billion is the number that's out there at the moment. What sort of increase are we talking about? Just an extra billion or two, or something more sizable?
Yeah, look, what we said, it could be a little higher, it could be a little lower. I think where we are now with the restrictions coming off, we have the flexibility to do what we think sort of prudent based on the earnings capacity and our view of what's going to happen over the coming quarters. But I think the good news is we start with a place where we've got a tremendous amount of excess capital, and we get the ability to start returning it this quarter. And so it'll be a significant return starting soon.
On the asset cap and other regulatory issues, Charlie said on the call, quote, that the work remaining there is significant. So is that to imply asset cap definitely in place for at least the rest of this calendar year?
Well, I think you have to sort of think about the body of work that we've got to get done across all of the risk management build out and regulatory remediation. There are a number of things out there, and many of them are public, and so you can kind of see the multiple consent orders. And so there is a significant amount of work for us to do to complete all of this work. And I would say it continues to be our number one priority. We're making progress, but there's still a lot to do, and we're a multi-year journey to get it all done.
Shepard Smith here. Thanks for watching CNBC on YouTube.